Hello again, Maverick Traders. Welcome out to your currency midweek for April 20th, 2022. Corey here with you as per usual. As always, just a quick reminder to make sure that you follow your trading plan. So the last week has been pretty interesting as far as what's moving and kind of how things are going and whatnot. Let's take a little closer look at markets. We talked about this last week. There's just not a lot from a broad market perspective that's happening. You're in a sideways market in a lot of different things. Now, where that's not really true is in commodities. That market has been trending. In currencies, we highlighted, I really emphasized the Canadian dollar. And I thought, the Canadian dollar really looked like an opportunity for this last little while, and it's been the best performer actually over the past week. I've been trading it against the US dollar, even a little bit against the yen, which I thought had kind of run out of gas a little bit. The yen still keeps going and just kind of bleeding a little bit lower. But not so much the yen as even just trading the CAD against the euro and the pound and so on. But the CAD is, I think, still a pretty good looking currency for more continuation. We'll look at that a little more closely. But it's hard to trade some of these other things. Stocks, not real interesting. Crypto, not super interesting. You could get into, again, other commodities, gold and oil, still holding up relatively well. But I feel like this is where having different avenues, the problem with only trading one market is you can get into this scenario. Like if you're just trading crypto, boy, it's probably a lot of sitting on your hands and waiting and, looking for pitches to swing at, but there's not a lot of good pitches to swing at. So you sit there and you wait. And the difficulty there is a lot of times people will trade out of boredom or trade out of, if you sit in front of the screen, you're going to end up doing something. And this is why it's maybe very helpful for people to not sit there and stare at bouncing numbers and so on, because for one thing, you have to justify the time you're spending. And so if somebody sits there for 2 hours and then they walk away and don't do anything, they feel like, well, I kind of wasted my time or whatever. So people will force the action, and you definitely don't want that. So, the ability to trade multiple markets right now, actually FX looks like one of at least the CAD has given us some opportunities. I'll put it that way. And that's what I've liked over the past week. Definitely we emphasized that point in last week's midweek. CAD CPI came in hotter than expected, 1.4 versus 0.9 expected. Inflation numbers creeping up around the world. We're definitely seeing that. There is a debate right now as to whether the US has hit peak inflation. And I think we're pretty much at peak inflation. They're kind of at the top, but 8.5 is a pretty bad top. I mean, remember the Fed wants 2%. That's their target. 8.5, 4 times higher. No, thank you. So even if inflation is at kind of a peak and comes down to 6, well, that's still 3 times higher than their target. So even though we are, in fact, seeing data coming in right now that leads me to believe that it's going to come back to 7 and 6 and some of those numbers later this year, that's still way, way too high. And the Fed has to move and they have to raise rates. I thought that the Fed, frankly, was underdoing it. And then I have to admit, I didn't envision this much inflation and this much of an aggressive Fed. I tend to always bet on the Fed and the under, meaning, I bet on them being dovish. If people expect them to raise rates 4 times, well, they'll probably only raise 3. If people expect them to raise by, 2% over the next 3 years, well, I'll bet it's only 1 point something. I'll take the under, and that served me really well for many, many years. And I kind of said the same thing earlier this year that, well, it's still, I mean, the Fed just, they're slow and they're accommodative and they're dovish and they keep rates low for too long. And this is just their nature. I do have to say, for the first time in well over a decade, in many, many years, you really can't take that stance anymore. And it's not because of them so much as just the market's forcing their hand. They have to come in, like they're going to raise 50 basis points at this upcoming meeting. That's going to happen. There's going to be more rate hikes. They're going to be more hawkish. Now, the market may still go to an extreme and think too much. I think the market may overdo it and the Fed will always err on the side of dovishness, but you do have to say um, that at least I would say I was wrong in terms of earlier this year, kind of saying, yeah, inflation's going to keep climbing, and the Fed was ridiculous to keep saying it was transitory, and all of that was right. But I did think that they would not be as hawkish as they actually are going to be forced to be right here and right now. So the markets, have changed a little bit that way. As far as this week's returns, you can see the markets, stocks a little higher, crypto bouncing, gold and silver, oil, some of these other commodities pulling back a little bit. But what's the difference in all these charts? Here you're getting a bounce, but these are sideways markets, and here you're getting a little sell off, but these are uptrending markets. So, maybe these are dips worth looking at buying. How do you think gold and oil are going to trade? There's certainly the possibility that they've peaked out for a time and that they'll go through a little corrective pattern here for a couple of weeks. But, my overall targets are unchanged. Like I've talked about in the case of gold, I still think there's another couple $100 an ounce of upside here. If you look at the long-term charts of gold, big, massive cup and handles that are just back up to the highs and poised to break out. And when we break out, it should run about 1,000,000 miles per hour to the upside. So I don't think it's done. I think it's short term, a little exhausted and a little bit of needing a breather. But overall, I would still say probably pretty good opportunities. So the yen, the worst performer, the CAD, the best performer, and not far behind, you can see the Aussie and the Kiwi performing relatively well. Certainly not as well as the CAD, but performing well. The yen is into a slower bleed, and sometimes when you've had such a dramatic drop like the yen had, it kind of put in this big, huge exhaustion that we were waiting for and watching for. And it was this massive downside move and kind of flush out to the downside. And then it proceeded to trade sideways, but it's kind of trading sideways with this actually a slow bleed. It's making lower lows. What's interesting about that is if you look at certain indicators, you'll see divergences. And a divergence is something that I look for primarily in the strongest of trends. So let me explain what I mean by that. Let's look at this. Well, we can look at it in a couple of different ways. Let's do this. This will be a simple way to do it. The MACD is an indicator that frankly I don't use all that often. But where I do use it, like some people use the MACD for buy and sell signals and all these sorts of things, and I don't think it's very helpful for any of that. But the C&D stands for convergence divergence. Basically, do you have an agreement in trend? Do you have a disagreement in trend? Are you trending higher? Are you trending lower? And over what time period? So if we come in, now this is just the Japanese yen on an ETF, primarily against the US dollar. But here is kind of the point, I guess. If you come into like a 4-hour chart, and let's just take this back a couple of months and it'll capture this downside move. You can see the deterioration and whatnot. Here's what I would kind of point out is that this was the big huge decline and kind of the exhaustion low. And now we're in that slow bleed lower that has made a lower low in the yen. But look at the MACD line, which is this black line. It's at a higher low. Now, what does that mean? Well, two roads diverge, and I took the one less traveled or something along those lines. Basically, it's just a momentum gauge. And I, I think a lot of people waste a lot of time on indicators, but I will say this. If you see something that's in a severe trend, something that is just absolutely bonkers to the upside, or in this case, the Japanese yen, which is just completely bonkers to the downside, then I do turn to these, and you can pretty much ignore all of this. Like, I won't get into all of this. This is the histogram, and all it does is it turns positive when these two lines cross. See how they crossed up? That turned positive. When they cross down, that turns negative. These are supposedly buy signal, sell signal, coming into maybe a buy signal here if these two lines cross up. I don't use it for any of that, but I would use it in that the price action made a lower low. That's clear. The indicator is making a higher low. That's clear. What does it suggest? Here's all that you can kind of say about this. The price has selling pressure, right? So if we think about the market simply, it's supply and demand. It's how many buyers versus how many sellers. And clearly, in this case, who's winning? Well, supply. Sellers are just pushing this lower, 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 lower. At some point, there will be a little bit of a shift, right? This group kind of overwhelms this one. Now, there might be a few reasons for that. It might not be that the asset is strong. It might simply be a lack of this. If you run out of sellers, if people say, boy, I'm just not willing to sell the yen down here anymore. I'm not willing to short it. I'm not willing to sell the currency. At some point people will just say, no, I've sold all I'm willing to sell. That's it. Just a lack of sellers can push this up. Because if you have some buyers and you'll never have zero, but for all intents and purposes, to make an example, if you have 1,000 buyers and zero sellers, well, where's the price going to go? It has to come up in order to find someone willing to sell. And if you only find 500 sellers and there's 1,000 buyers, well, then it's got to go higher. And you've got to find some equilibrium and so on. So what this entails is just basically, yes, price has gone down. Yes, there's more selling pressure than buying pressure. That's without question. That is what has happened. This is just kind of a measuring tool to basically say, okay, well, how much strength is there behind it? Is it forceful? Are we selling off and there should be more? Which, by the way, you see how this sell-off, the MACD was making new lows right along with it. This sell-off, though, we just bottomed out. This sell-off made a higher low. So there's not the same pressure. Basically, this group might be running out of steam. It might be running out of willing sellers. It just doesn't have the aggressiveness that it had back here. And the basic takeaway is usually it's kind of running out of steam, and that not because there's a lot of these guys, but simply you're running out of these. If nothing else, you're running out of willing sellers, and so you should see somewhat of a bounce, somewhat of a, maybe it's more of a consolidation than anything else. But I hesitate to really get aggressively short the yen right here, right now. I get it. It's been the trade, and frankly, I kind of said, I would halt bearish trades in the yen too early because it has gone a little lower, especially this week so far. This drop here is a pretty good percentage move, but I think that that's the right approach. Now, there's There are certain times that markets are just simply broken, and maybe the yen is so broken that it will just break all statistical analysis. It'll break all norms. It'll break all, you know, divergence, anything like this. Maybe it just does. All of that doesn't matter. Maybe this is so broken that there will be more and more selling and more selling that just piles on. Possible, but that's not the norm. If you're trading this based off of, what gives you the best statistical probability, I'm a little cautious against maybe getting, you know, a lot more bearish on the yen right here, right now. Hope that makes sense. So let's take a look at a few of these things a little more closely. What is this trend? You know, are we in an uptrend? Well, we're below the 20 and the 200 day. Are we in a downtrend? Well, we're above the 50, pardon me. Are we making new highs? Well, not really. We're kind of stuck below these highs. Are we making new lows? No, not really. We're above those lows. You just don't have a trend here. I don't think you can call this stock market as the S&P 500. Is this bullish? Is it bearish? I think it's just neutral. And you're seeing that quite a bit right now. Markets in that phase, which oftentimes is what follows a strong volatility move. You need a breather, and the market's going through a breather before the next big run. And the next big run, I think the odds favor it being on the downside, but we shall see. As you look at strength and weakness, like we talked about, CAD definitely the outperformer, yen the underperformer, but you want to really get aggressive, you even look to be a yen buyer. I'm not sure I've crossed that bridge. That, taking profits, moving away from trading something is an entirely different animal than actually going in there and trading it to be some, big counter trend move. I'm not sure the yen has enough strength for that either, but I would be cautious about shorting it further from here. Crypto land, everything pretty good, pretty solid, 2%-ish across the board. SOL, of course, the top performer. Let's look at a couple other things here in terms of charts. So there's not, if you look at international charts, there's not a whole lot of difference between this chart and that chart. This more representative of US, this international. Crypto more lagging, more weak than stocks. I'd call it neutral. You're below the 20, you're above the 50, they're sloping sideways. It's just pretty much kind of a perfect zero. So we already looked at the S&P, that's sideways. Whoops, I wanted to skip forward here. We look at the international markets. Again, a little bit weaker than US, but basically sideways market environment, just choppily back and forth. Crypto, I could make an argument for a bearish entry point. I really like the setup of when you feel like you've broken through some key level, when you retest back to it, that can be a nice opportunity. For example, here could have been, see how we break above this, but when it came back, it didn't give a setup. I mean, it just literally sliced back below. Okay, we try to break out again. Well, it just sliced right back below. But watch here. We break out and then we retest. Instead of just slicing below, see the successful retest? That's a buying opportunity. Here you broke down. So what are we looking to do? Well, short the retest, which is where we're at. If I'm trading crypto, the temptation for me really is on the bearish side. I mean, that's where it looks like it's going to go. If it reverses hard, like if you had a big bullish candle that just broke up through, okay, it'd be like these where you never had a setup. You never had a setup. This one, you had a setup. So right there on the retest, you can be a buyer. Right here on the retest, well, you're a seller. bearish trader, et cetera, et cetera. So I think that's where crypto goes next, is another wave of selling. That's the way I see it from the technicals. We're retesting the breakout zone. And for now, that is not a good candlestick. That is basically failing on the retest. And usually that leads to further deterioration. So crypto more bearish than bullish to my eye. As we look at the rest of this week, you get some CPI out of New Zealand later today. You've got some speakers. So in the US, obviously, we highlight Fed Chair Powell, who is going to speak tomorrow, but also there's some ECB, there's Bank of England. Friday, you get some European manufacturing and services PMIs. You get some in the UK, and you get not US, Canadian retail sales. In the US, some manufacturing PMIs. I would call this, for the most part, a whole lot of nothing, except for maybe a little highlight here on CPI data and a bit of a highlight here on Fed Chair Powell speaking. If there were, if there's going to be something that moves the market, my best guess is that could move the Kiwi a bit, and this can move markets a bit. I don't expect Chair Powell to say anything too, game changer-ish, where he's probably not going to say anything that's completely different than what he has said to this point, but you just never know, and sometimes they do that. So as you look at currencies, there's just not a whole lot of difference between a lot of these. So let's come back in and let's just go through some charts here. So maybe I'll go, we can look at this a few different ways. I mean, overall, trend-wise and so on, let's actually load a different chart. Let's do that. Let's go. Well, how do I want to do this? Let's just do it. Let's load a different chart. I think we'll go trend and velocity and then maybe go from there. So this is probably, for the most part, you're not going to see really well-defined trends that are kind of off to the races. The Kiwi here, kind of interesting, deeper pullback and coming up out of it. I'm not afraid of these where you get a deeper pullback back towards the 50 period moving average, and that's kind of the daily chart here in the Kiwi. Looks like we could accelerate to the upside. All of these look better. Aussie, same thing, better, healthier chart, and most definitely Canadian dollar. I mean, it's the best of the best. We looked at this chart last week. It's just, it's very bullish, and no surprise that we're getting a nice big spiking surge. And really the momentum on this has remained bullish throughout. I mean, you've been on a buy setup for the most part throughout. As we look at some of the other currencies going away from the commodity currencies, a little bit more of a mixed picture. This is one of my, deeper pullback. British pound here looks like a bearish entry point. If you fail right here against that 50 period moving average, that is a bad sign and tends to lead towards further deterioration. So if you wanted to play the whole, bigger pullback type of trade, you could go Kiwi pound currency pair on the long side. Basically playing Kiwi to outperform the pound is kind of how that would look. You see the euro still more neutral to bearish. Swiss franc more bearish, kind of neutral and starting to break down. The yen, again, here was the big flush, and it hasn't gone down a whole lot. Yesterday was really, it was just a slow bleed, and then yesterday kind of dropped. And I think that that's another exhaustion. That's basically the little lower low in the yen, but higher low in those momentum indicators. And it's aggressive, but you could play the yen to the upside, that's highly aggressive, and I'm not sure I'll even do that, but definitely taking profits in your yen shorts here. Again, I think that makes sense. I'm just not going to be surprised when when we fast forward a couple of weeks and the yen's climbed up here, and you're like, okay, this has rallied a lot more than I would have expected. I think it's coming. I think we'll go above this low and we'll see a more sustained rally. Now, do we want to short it when it gets up in here? Probably so. Maybe that'll be an opportunity, but we'll have to wait and see when we get there. The US dollar, sharp reversal today. It kind of, has been in more of an uptrend. What do you make of this chart? Well, it's a big reversal, but something that had been stronger. So, do you where do you put your trump card? Do you say, well, the trend has been bullish, so I'm going to expect that to persist, or do you take this as a big reversal that tends to lead towards more downside? I would say that usually when you see this type of size in the candlestick and so on, it's usually not a one-day event. So would we expect a couple more days of selling at least? Yeah, probably so. Usually it kind of big candle, neutral-ish candle, and then maybe one more big candle, and then you could start to bounce up out of that. Would probably be what makes a ton of sense here. Excuse me. I'll mute up there so I'm not coughing in your ear. Hold on one second. Sorry about that. So Bitcoin looks like a short to me. I could look at this a number of different ways in terms of my expectations, but ultimately, like we laid out, you're retesting the breakdown zone and probably going to see another flurry of selling pressure there in Bitcoin. There are some others that look a little better, like Bitcoin Cash, not quite as bearish. Ethereum, Litecoin, that one's more in the neighborhood of Bitcoin, a little bit worse looking. Here you got Cardano, again, bearish, retesting that breakdown zone. And Solana, a little bit more bullish. So if you were, I'd call most of them neutral, but as far as bearish, you've got Cardano and you've got Bitcoin, probably my two favorite setups on the downside. Let's look at a few currency pairs, and I see a few requests in the chat box. So if anyone has any others they would like to look at, fire away. I'll get to yours in just a second. I see those requests. I wanted to look at the Kiwi against the pound. Maybe we'll start there. So here's pound Kiwi, right? And the trade here, like I was saying, you'd play Kiwi to the upside and pound. I guess I should put those this way, but either way doesn't really matter. But that's the philosophy. Now you're going to be trading pound Kiwi, but that's the point. You're playing pound to the downside, Kiwi to the upside, right? Now, as far as the trade, if you look at this, so I've mentioned this setup before. In fact, we talked about it last week while we're on that topic. Let's do a quick refresher. Okay, last week we said what? Let's go to let's go daily. Let me pull up Bollinger Bands. Let's go. Here's what we highlighted as an example. Whoops, I don't want the dot in there. $ CAD USD. Okay, here was well, dang it, it doesn't show today. Today we've got a big jump to the upside. We're all the way back up almost here. Let me do this instead. That's the problem with using that. Okay, here we go. So here's $CAD. Okay, this will show today's price action rather than that end of day. But here's the actual literal chart, right? We talked about touching the upper band below the 50 in $CAD. So what's the trade? Well, you're trading it to the downside. And trading it to the downside, expecting another retest of this support, and probably even more to go beyond that, but the trade's working. So with that in mind, do we have something similar in pound Kiwi? Well, let's look at it. Okay. Very similar type of approach and meets the criteria. Are you hitting the upper band, you know, for shorting? So at the upper Bollinger Band, check. Are you still in a downtrend though? Okay, downtrend in effect, check. Are you rolling over? Check. Are you, does this look like it's going to trade back towards this low end of support? Check. Do you have patterns within patterns? Check. Let's look at it. You see the same type of dynamics here. This is what I love about trading, is when you have the pieces come together. So my single favorite idea, let's call it for the next couple of weeks, this is a daily chart, is for pound Kiwi, and it won't go in a straight line. I mean, maybe it will, but usually they don't. It'll bounce tomorrow and then it'll go down. But the overall trend should take us back to that support. And frankly, if you get back there the third time, you're probably going to plunge below it. But the risk to reward towards these types of trades is very good. It's not 100% success rate by any means, but it's very good. So if you'd taken the trade and shorted dollar CAD last week, okay, it's a great trade. Pound Kiwi's giving you the same thing this week, and that's kind of what we look for. So I'm going to start there with my point of emphasis, and we'll grade our work next week. This could be a stop out, certainly possible. But believe you me, we're looking at pound Kiwi. Well, I should say because this is my system and my approach towards the Bollinger Band technique. And if you're not familiar with that, just go watch the video. It'll give you more insight that way. So let's come back to a few requests that you all had. Now, that brings up the question, are there other pound setups? Good question. Before we move away from it, what about pound CAD? What about it against the Aussie and so on? Still fine, still bearish setups. It's not the Bollinger Band technique in pound CAD, but I would definitely be short. We highlighted CAD as an idea against everything last week. We said you could short it, or pardon me, buy the CAD against a short pound, US dollar. You could even do it against the Kiwi or one of those, against the euro, whatever. So it's not the Bollinger Band setup, but still the kind of the same type of idea, if that makes sense. Definitely a more bearish trade. Let's look at it versus the Aussie. Okay, not quite, but basically, I mean, that's essentially the same thing. Hit the upper band, still below a declining 50. It's not perfect. It didn't quite touch the band, but for all intents and purposes, that's the same concept. What you're looking for is the hard signal to find. You don't get overbought in a downward trend very often, and when you do, and you've got patterns within patterns and all the checks boxes and so on, it presents a nice opportunity. So good stuff, good questions. But pound Kiwi would be the the one that checks all the boxes, I think, for a downside trade. CAD Swiss Franc. So let's look at a couple. Well, before I move to the other charts, we highlighted it against everything last week, right? See the setup? See the touch of the lower band? We're above the 50. See the patterns within a pattern? This is why we loved CAD last week, because it had this setup against everything. I mean, picture perfect. That is such a clean cup and handle. That is such a clean setup. Come down, touch the lower Bollinger Band. You're still in an uptrend. That's the buy point. And not only do we get back up to resistance, we blow through there. So, I mean, it's perfect. It's clean. You could have traded Euro CAD. And I was trading CAD against all sorts of stuff, but Euro CAD didn't have the setups. It didn't get to the band. It didn't, but it still would have been successful. Okay. But the clean, you got to wait for the ones that meet your criteria. And last week, that was really, you could have been short dollar CAD. You could have been short the Swiss franc against the CAD. Pound against the CAD we looked at, right? I guess that one didn't quite meet the criteria. Pound against, well, what else? Well, even CAD yen. Again, it didn't meet the criteria, but it would have been successful. You could have bought CAD against anything, and it would have been successful. But the real setups were against the US dollar and the Swiss franc. Good stuff. All right. Kiwi, CAD. Let's take a look. What does this tell you? Well, it tells you Kiwi's worse than CAD. We already knew that. That was already happening last week. So, where do we go from here? Well, Kiwi's probably not going to be much better than the CAD. Like I said, I mean, CAD's the best, but ultimately, is the Kiwi better than the pound? And that's where we have the setup. So, we really emphasized that point last week that we thought the CAD was the best of that bunch, and it has been. I think you could trade the Kiwi, though, as a specific trade because it has a setup versus the pound. And by the way, the pound has been a disaster. So if you look at the Kiwi versus the pound, well, Kiwi's actually better than the pound. And why do I say that? Well, because the pound is still in a downtrend versus it, and still below a declining 50-period moving average and failing up at the upper trend line, and this is very similar to that Swiss franc trade against the CAD from last week. It was right up against this setup, and then what did the Swiss franc do? Well, if we're going to see a repeat, this chart will go like that. And next week we'll be looking at it. Now, I think that's a little too optimistic that it'll just go in a straight line and be that perfect, but it should be the directional bias. It'll be choppy getting there, up, down, but working its way down towards that lower level, I would suspect. So, good stuff. For the rest of this week, let me look at our schedule here. This likely to move in a choppier market environment in most names. I like FX about better than anything else. I think there's setups right here, right now. We talked about it last week. The other markets are sideways, but FX is giving some opportunities, so let's take them. We have ATR velocity tomorrow at 5 p.m. Eastern Time. Join us for that class, and then as always, we'll send out the currency room. If you have any questions, anything we can do to help, don't hesitate to ask, and have a great rest of your week. We will see you all next time. Goodbye, everyone.